All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, May 4th, 2023. And if you are a Star Wars fan, may the 4th be with you because I love Star Wars. Um, nice to have you on the video today, doing it live as always, 9 a.m. Eastern Standard Time here on the YouTube channel. Make sure to subscribe if you haven't already. Make sure to hit that like button. Comment any of your questions. I'd love to answer them for you guys. This is your channel. This is your content, whatever you guys want to watch in terms of the market. I would love to do a video. So again, any kind of ideas that you want to go over, maybe some things you want to kind of revisit in terms of technical analysis, fundamentals, or stuff like that, please make sure to comment on the comment section. All right, let's go ahead and begin. We did have the FOMC yesterday, 25 basis point hike, quote unquote hawkish pause. Again, we talked about how important their perspective was. I mean, it's kind of hard to trade that. We did get that run up yesterday. I did expect us to get the run up into the FOMC to 4,200 and then reject. We didn't get that. We got to around 4,170 S&P 500 futures. We went ahead and tapped the lows of the month, which was really last Wednesday's lows, of right around 40.75, we'll call it. We did bounce, and I went ahead and posted a limit order signal for S&P 500 futures. We did catch the S&P 500 futures long yesterday for 20 points, but then we stopped out as we were sliding the stop. So again, kind of keeping it tight in regards to our futures trading. Right now, we're down about 3 handles. We were getting to 41.20. That's what I told everyone last night, right around 11:30 at night, to slide that SL to break even. Once we get to 41.20, we got to 41.18 of all things. Came back down this morning. We're kind of just chopping around. So what does that tell me about the market today, at least in terms of the Fed policy? Well, we did get that 25 basis points, at least that. The question is now, what's next? And I think that's kind of been the tale every time. Once we get a CPI number, a GDP number, an NFP, a Fed result, or Fed meeting, we're always thinking about, well, what's the next one going to be? That's kind of the deal here when you're trading, is that you're trying to predict the future on time. And that's a very difficult endeavor to do. So my point of view in terms of seeing the Fed chairman speak and the Fed decision, the language change into the FOMC, more than likely that was it. And again, I said this back in February. I thought they would have paused then. Mind you, we didn't have a meeting in April. So they had one more hike and then the other hike today. So I was about 50 basis point off if we go ahead and actually pause. Right after they hiked, guys, we had that Pacific West Bank news that they were looking for a buyer. They didn't file for bankruptcy or anything, but again, this is a very jittery market. So the point I'm trying to make here is that, in my opinion, it's just a point of no one knows. You're not bullish enough. You're not bearish enough. That's kind of where you are. You're kind of like in the middle of this range, like we talked about many times. You could see it here on the S&P. If we go back to here to 40.98, we'll be right around May 16th last year. We're in the exact same level we were 12 months ago. But again, with less interest rates, right? But yet higher employment. Technically, we are higher employment. So how do you trade this? It's really just reversals and reversals, drops, and bounces. That's really all you're doing here. So again, we're going to go ahead and show this S&P 500 chart. And you could see really head and shoulders kind of pattern if we can hold above 40.60. So I placed an alert at 40.80. If we break below 40.60, I would definitely look to short. And again, we talked about this many times. The VIX. The VIX is now near 20. 20 is the resistance for me. I tweeted that this morning. We're at 19.19. So we're like, again, unless we break out of this thing rather quickly, no gaps to fill or anything like that. Again, unless we break above that 200 MA on the 4-hour on the volatility index, I think that we are going to bounce today. And again, we're going to lead up into Apple's earnings this afternoon. In terms of data points that is expected to come out today, all we did was get an unemployment claims, and they were a little higher than expected. So not much change. I mean, if you look at the NASDAQ here, guys, it's pretty much just chop. That's all you're getting. It is setting up for a breakout if we do break above around 13,360, 13,350. But as of right now, guys, you don't have much going on. This is why I only have 2 trades open. This is why I only did 1 futures trade open. This is why I'm basically flat on another futures trade. It's just not much. even for a gauntlet like we've had, FOMC, we had some ISM, we had private payroll claims, we got more earnings, and the FOMC, you would think that, hey man, this is probably any excuse for the bears to short, and it's not that simple. You're not getting enough players in the arena, meaning volume, to make such a decision. So all you can do right now is really base yourself on individual stocks and their movements, because the individual names are where the alpha is, rather than just trading the a sector specific ETF, for example. But like like an SMH or a SPY, or not SPY, SMH or an XLE or an XLF, for example. So what's really holding the market today, obviously, is the Russell, and the Russell's down about 0.71%. So let's go ahead and take a look at RTY. This is the Russell index on the future side, and this would probably be the best way to trade this thing. If not, it would probably be the IWM. So here we are taking a look at the Russell 2000 futures. Really, in terms of support, we're kind of near it, unless you think we're going to get to 1640. It's tough because you really have to break 1700 to want to short, because that would be your confirmation. So again, guys, you're really much in a no man's land, where it's just you're gonna be charged money for premiums just to wait it out. Just wait and see what happens, because there's nothing has changed. All we did was retest last Wednesday's levels. So let's go ahead and take a look at put call ratios rather quickly. And I tweeted this yesterday. We're going to go to PCSP. This is put call ratios. And we're going to kind of set it up where it looks very similar to the chart that we're looking at here. This is the 1 hour chart on ES. This is the 1 hour chart on put call ratios. So you can see, based on the last time that we've had this elevated put call ratios, this was last Wednesday. This was last Wednesday, right at the low. We're at 40.68. And then we went ahead and soared to 42.06. Look where we are. We're right near that 4100 level. My expectation, guys, is that we get to 4150. That seems to be that magnet line that we keep retesting, just to frustrate the bears and just to nuke this put call ratio down. The only thing that may change is the VIX breaking above 20, but again, we will watch it very, very closely. In terms of the market movement today, dollar's pretty much flat. 10-year treasury yields are pulling back. Volatility index, let's see if we break 20. The Dow down 59, not exactly panic. NASDAQ, again, we just take a look at the NASDAQ, not much going on. Chopping around for a full month. Mind you, we have been stuck in a range between 12.9 and 13.2 for 30 days at least. S&P 500 down about 9.22%. Russell down about 0.68. Crude oil up about 0.22 at 68.76 a barrel. Gasoline flat. Gold, we wicked that weekly high on gold. Take a look at this. And we rejected rather quickly. You can see it right there, right at 2089, 2085. That's that level that rejected. If we break below 2000, that's our support level. We'd be probably shorting to around 1925. We may not catch that many points, but we can start taking a look at that. Silver, 0.79%. The only way gold will fall is if we get a risk on market, but the dollar can kind of stay stable. That's really it. So we need, if we want gold to go down, for example, which I really don't care either way, I don't have a long position in gold, but if we want this to break, that's going to break with the dollar. So the dollar needs to fall more, and we're near it. We're at 101.30 on the weekly. We're testing the 100 weekly moving average. Once we break below down there, buddy, it's going to get ugly, because we also go death crossed on that as well. So keep that in mind. Last little bit of info, euro dollar. We had the ECB today. It's flat, 110.53. Dollar yen, flat. Pound dollar, 125.72, flat. But crypto, 29,205. See if there's any opportunities in a name like Mara or Riot moving forward. Let's go ahead and extend. We are on the 1 hour chart on Mara. We filled a gap here, but nothing special. Had a break of 1066 as a level for Mara if we get continuing weakness on the dollar. We just revisited that daily support level. We need to get above here, which is your 20-day moving average of around 982. Looks like we will open there. I want to see if we close above that level, and then we can take a look at possibly the 10 strike on Mara. We take a look at Riot. Again, these are just cryptocurrency or Bitcoin proxies. And you can see the daily we rejected the 20-day. So again, that's our momentum indicator for the short term. and then 831 for the gap fill on Riot. We are now at 1112. That'll get you, is that above the, oh, we're right below the 20. So I think Mara would probably be the better trade if you're trying to go long crypto, and you would short Riot if you're trying to short it. You're trying to short crypto, for example. And they're not open 24 hours a day like crypto. Let's go over the trades that we had. I think we had a question. This is from Carlos. Good morning. Thoughts on Apple calls? Yeah, let's take a look at it. So yesterday, look at the price action we had. So yesterday before FOMC, about 7 minutes before the number, or excuse me, before the report, I let the team know, hey, we're 2% green on Apple and we're flat on our other trade. So I said, if you guys want to go ahead and close it here, if you feel like you have too much risk on the board, go ahead and close it. Some of you did, some of you didn't. I'm not sure. I didn't get like a survey or anything. I held on to my positions. Granted, I have the 175s. So there was a couple of pieces of news that came out. One was the Qualcomm earnings report that came out. I retweeted that, softening chip sales for the handsets, Android and Apple. They cannot name Apple as their modem customer. I don't know why. It's kind of like Fight Club. You just don't talk about Apple, I guess. But either way, Qualcomm said that their modem buyer didn't buy as much. So again, that might be a little bit of a peak to the iPhone sales that are actually coming up today after the bell. So if Qualcomm was soft, and you can see how Qualcomm is trading today, let's take a look at it. Qualcomm around 104. You could see the 2-year, and again, I like Qualcomm long term, but it's pretty ugly here. Again, not a lot of an edge here. The expectation is, these chips are still going to be in demand. But again, back to Apple, which is the calls I have, and you can see that dropped yesterday as much as to 163, and then we bounced about about $2 from that. So we are down about another 245 this morning. What we need to do is get above 167. So it's really just trading with the S&P. That's pretty much, again, the Apple is the largest weight of the S&P 500 futures, or SPY, or the ETF as well. The key here, guys, is this level here. Again, you have the trend line, you have this 170 level, which is your 786 fib. You have a gap to fill on the daily at 170, 122. We did not fill that yet. 175 would be true resistance because that is near the August peak. Does Apple knock it out of the park? Well, I can tell you this, that my premiums are going to get hit for sure. So again, it may be ugly this morning. We'll see if we get a turnaround. And again, the expectation is that we're going to get demand ahead of the number. The other piece of news that Apple had is that they may, or pre-announced, or at least some news came out, that they're going to have $90 billion worth of buybacks and dividends. Now, again, that has not been confirmed by Apple since we don't have the report. But that was some news that I did read today. I think Bloomberg was the one that reported that, or Reuters. 90 billion in dividends and buybacks. Could that boost Apple? Is that priced in? Again, we have to see as it goes. But unfortunately, the FOMC broke down the S&P. So did it broke down Apple. Microsoft is up. Amazon's up. Meta fell yesterday on some FTC headlines. And Google has been okay. But Apple took a hit. That's really much it. And it just sucks because it's right ahead of earnings. The idea was to play the run-up. And we did get the run-up. We got the run-up as high as 171 or so. But then we had the FOMC pull us back. So it's going to be a waiting game, Carlos, on this one. We're going to see exactly the price action in the morning. This morning, maybe we get a chance to, maybe we get a run-up back to 167. That'll may push some demand a little higher. The only issue is that, again, the 175 strike is out of the money. But again, if you are playing earnings, and again, we want to sell our contracts to somebody, that's probably the contract people want to buy based on implied volatility. I think the IV on Apple is right around 2%, 2 to 3% for the earnings report. We need some really great news to get that, or we would need something that we don't know yet in terms of news in order to get a little higher. But again, we're still above some key levels, 164.73, you're still above, it's 164.78. We're now below the 20-day moving average, and we've kind of held that the whole way, really since early March. Mid-March, we started bouncing, and then we kind of held about that 20-day, and that's kind of been our trend line. So again, do the bulls defend this 20-day? Has this been a front running of the earnings report? Is this just screw your premiums? We'll see what happens. Again, FOMC related, as they are, it's the lowest beta you can get because it moves 1 for 1, almost Apple and the S&P. So just a holding pattern here. I also have DraftKings. They report after the bell. So again, the expectation is, do we get some demand into the print? And in order to do that, we need the VIX to stay below 20, and we need the S&P to get back to 4150, which is the exact same number we were pre-FOMC meeting or pre-Powell. So in terms of the perspective of what do we expect moving forward, again, if we hit that 4,200 and that was that peak, that 100-week moving average, so be it, but we need to get below 4060 to confirm that. And we're not just there yet. We're still kind of chopping around. NASDAQ is still a little too strong to be bearish here, guys. All you've been is chopping around for 30 days. That's all you've been doing. So best bet is just kind of wait here. That's all we could do. And it kind of sucks, but you know, not a lack of effort. It's just the price action of the market. And we're just going to have to wait and see as we go. You know, basically like 90% of trading, guys, is waiting and watching. And you know, it's not as exciting as you think. It's really just watching the price action, watching the premiums move, watching the macro, watching the news. And that's pretty much it. And I wish I had a little more action on this one. But again, the market's not even open yet. We have to see exactly what we get. But again, Apple's still, you know, slightly below the 20-day. So is the NASDAQ. So we're going to keep an eye across the board. Listen, guys, if they flip this thing, no problem. We can short as well. I just wouldn't like to short when put-call ratios are elevated. The idea to short was when put-call ratios were suppressed, when the VIX was at 15. We talked about that portfolio insurance. This is when you want to start taking a look at buying some, you know, puts, if anything, if you want to protect your portfolio, but not really much as a trade, if anything. So, you know, maybe you gain about $4 on your VXX. Maybe that's enough for about 40% in an options trade, but I didn't even signal that, so it doesn't really matter. But we'll go ahead and leave it there, guys. Again, Apple reports after the bell. I'll retweet all the news and info as we go, and all updates, trade updates on Discord. And if you guys got out before the FOMC, great. You're pretty much sitting pretty with no risk. You probably feel great today, and we'll see where we go from there. But I'm still in it, and I'm still watching. So let's see if we can make this a turnaround and make it a great rest of the week. We'll see you guys tomorrow for the morning note at 9 a.m. Cheers, guys.